Hey folks, Nick here with the Allen Turner Home Team. I wanted to break down the end of the year stats and numbers for the 2022 Metro Atlanta housing market, give you an idea of what to expect and anticipate as we move into 2023. So I got a lot to go over, and I know I can ramble on sometimes, so let's get right on to it. 2022 was another great year for the Atlanta housing market, although it was really a tale of two halves. To put my own spin on a Charles Dickens classic, the first half was the best of times, and then the back half was still actually pretty good times. But we did see a shift around June. That the early year was still crazy. That was kind of the end of that COVID craze that started mid-2020, carried all the way through about June of 2022 with crazy bidding wars and super fast price acceleration, all that kind of stuff. And then about June onward for the rest of the year, we slowed down just a little bit as concerns about rising interest rates started coming and inflation and sales prices, like I said, were just shooting up so quickly that we just kind of had a little bit of a pullback in about June that carried on through the rest of the year. But still we ended strong for the year. So there's still a very healthy market out there. But looking back on it, you kind of see about June we saw a shift that we're still kind of working in right now. More back to kind of a more normalized market, I would say. But anyway, I'm going to go over, this is the greater Metro Atlanta area, all the major counties around Metro Atlanta. And these are the end of year numbers for 2022. And I'm going to compare them with 2021. And then we're going to look at some trends from December to December. And some, like I said, some other things to expect as we move into into 2023 here. So this is for detached homes around the Metro Atlanta area. Those are going to be single family detached homes. And let's start here. You'll see here, we saw just a slight decrease in the number of homes that hit the market in 2022, just over 71,000 compared to 73,000 and change in 2021. So a little bit down, not a lot. So kind of about the same amount of homes hit the market. You will see, though, a pretty big decrease in the amount of homes that closed. We were down 19% for the year of homes that actually sold. But even with that, we saw prices go up. The median sales price went up 13.5%, up to $425,000, and average sales price kind of right around the same 13.5%. So we saw about the same number of homes hit the market, a lot fewer homes actually close, and prices still were way up for the year. This closed sales downtrend was we were probably on the right pace through about May or June to match last year, and then like I said, we just kind of slowed down a little bit on the pace of sales. Prices weren't really affected that much year over year, though, and we'll get to it in a second, but even comparing December to December, prices in 2022 still were up just a hair. So prices are still going this way. Inventory's kind of sitting relatively here. We'll get into that in a minute. And then sales were definitely trending down a little bit. And then if we come down here to attached homes to compare, pretty similar trend overall. These are going to be condos, townhomes, things that are attached. You will see, again, a little bit bigger decrease in the number of homes that hit the market, down about 12%. Sales, the actual closed sales, were still down about 20%, 21%. And prices were up just right around 13% again. Up to $325,000 was the median sales price. And the average sales price also up about 13.5%. So the trends were pretty similar. And this right here is pretty crazy for attached homes. They don't typically accelerate or appreciate in their prices quite as frequent or quite as quickly as detached homes do. They tend to appreciate a little bit slower, but they shot up just the same. So that's pretty cool. And now if we kind of come look at December to December, a few things I want to note. First of all, December 2021 was not a normal December around here. It was still the middle of crazy times, the middle of that crazy COVID market that you heard all about, with bidding wars and hundreds of people at open houses and 50 offers and waiving everything. That was going on in December, which is not normal. Usually around these parts, from about Thanksgiving through January, we're definitely, that's the bottom of the market in terms of pace of sales and things like that. So we kind of blew right through that in 2021. So these numbers look a lot different, but I would say December of 2022 was a more normalized December around here. Again, things slowed down a little bit because of interest rates have gone up. Last December in 2021, they were like 3%, 2.75%. This December, they were at 6%. So that changes buyers' affordability. It also changes sellers' motivation to sell, because maybe they bought a couple years ago and they have a very low interest rate. So, or they refinanced at least down to a low interest rate. So they don't have as much incentive to list their home and sell it, because now they're going to have to go buy a new home at a higher interest rate. So, so some of those things had impact on the inventory that we saw this December. But to break it down, a couple really important things. You'll see here's a huge change in the amount of homes that hit the market this December, down about 28%. Still 2,900 homes hit the market, but definitely down from the 4,000 of 2021 December. And as you can imagine, when a lot fewer homes come on the market that are exciting, a lot fewer homes close. So we were down in closings just over 40%. That's a lot. Again, last December was an anomaly. Interest rates were very low. There was a very, very active market. So this is a lot higher than normal. So they were bound to come down a little bit, but they definitely came down about just over 41% on number of closings in December of this year, or December 2022. Even still, prices were up. Like I mentioned earlier, prices were up just a hair, up 3% or so this December compared to last December. So even in a little bit slower market with higher interest rates and all that stuff, prices year over year are still up. This is a big one I want to note, and this is the biggest trend I see as we move into 2023. The actual number of homes on the market, existing inventory for sale, has gone up, almost doubled. It's up just under 48%. These are homes that are just sitting on the market. Nobody's buying them. Because you can see this is a weird combination. You have a lot fewer homes coming on the market and a lot more homes sitting on the market. Okay, so what does that mean? Well, first of all, this means last year you could have put a for sale sign in front of a dilapidated, burned down house, and somebody was probably buying it because the incentive was so much greater. The interest rates and the FOMO and the excitement was at a fever pitch. So things were selling like crazy. Some people are still trying to chase that market, either price their home too high, not have it in a good condition to sell. So things are sitting more than they have been recently. And the good stuff, things are hitting the market. And like I said, not as much. And the good stuff is still selling right away. Even just in the last week, I know of houses that have hit the market, gotten multiple offers, gone under contract for over asking price. I know an agent in our office who had an open house just this weekend that had 100 people at it. So the demand, the buyer demand is still there, but buyers aren't nearly as excited to jump on homes that are sitting on the market. So we're kind of seeing this trend continue of homes just sitting there. So it's very, very important if you're going to sell your home. Your competition is still low, a lot lower than normal for new exciting listings, but it should be new and it should be exciting and it should be clean and priced right and attractive to buyers, and then it's still going to sell right away. But if you overprice it or you don't have an agent who markets it properly or any of these number things, it's not in the right condition to sell, then it's going to become another data point down here, this ever-expanding standing inventory. But even with all this extra inventory of homes on the market, look at this. This is the month's supply of homes, okay, for sale. This is through January. So just to give you an idea, 6 months of inventory, 6 months of inventory is what experts consider a balanced market. Okay, anything less than that is a seller's market. Anything more than that is a buyer's market. So for years, you can see here from January 2021 all the way down here, we were at just over 1 month of inventory for the most part. A little uptick here near the end of 2021, but that was still only 1.5 months of inventory. So we were just sitting on no inventory for so long. That's one reason sellers had so much leverage in the market. Inventory was so low, interest rates were so low, so demand was very high. Demand was up here, supply was down here, so these guys had all the leverage. Even with this huge increase in the number of homes sitting on the market, we're still only at we hit a top end here, 2.5 months of inventory. Remember I said anything under 6 is a seller's market. So we got a long way to go around these parts to even get remotely back to a balanced market. So we need the homes on the market. We need inventory. And thankfully that's allowing buyers to have a little bit more control of the process. We can get inspections. We can negotiate repairs. We can get credits for closing costs. We can do all sorts of stuff that we couldn't do, last year or the last couple of years. So we're still very low on the months of inventory here, but we're a lot higher than we were. So don't get it twisted. Even with a lot more stuff sitting on the market, we still have a long way to go. But that's the reason why these good, exciting homes that do hit the market are selling right away. Okay, so that's important, more important than ever. Looking at sales prices, like I said, December to December, we were up about 3%. We were up about 13% for all of 2022. But look at this. This is back from January of 2021 through pretty much the end of the year right here. We're up about 35 to 40% from here to here in 2 years around Metro Atlanta. So that was a huge jump in prices from 280,000 up to about 360,000. That is not normal for homes to appreciate at 20% year over year like we were seeing for a couple of years. More normal is that 5 to 8% year over year price growth. And that's what I would anticipate we see moving forward, back closer to that. Now, we'll still have pockets in the very desirable areas, Alpharetta, Roswell, Johns Creek, Sandy Springs, North Fulton, South Forsyth. A lot of the areas we work, they're still going to be, they're still very desirable. Most of Metro Atlanta is still very, very desirable. So we'll see price appreciation. But I would anticipate if the pace kind of stays where we've been, we'll see closer to that 5 to 8% growth. This was December last year, and this is December this past of 2022. So we're still trending up, but this was right where I said the kind of market. This was where that tale of two halves came in right here. This was when interest rates started, or not started, but they really went up. And they got up almost to 7% right in November or so, or right at 7%. So we saw a huge increase in interest rates, which definitely led to a price decline from the top here. But year over year, and shoot, even if you bought back in January of 2021, even with reduced prices a little bit, you've made a good bit of money. So the market is still trending the right way in a grand scheme of things. And then closed sales. I mentioned multiple times that we were down in closings, which we have been, December to December for sure. Not to be totally surprised, because this was, look at even last December to January, this was a big drop. Historically, this only goes back 2 years, but this is standard. January is usually the lowest closed sales per month. Here we are again, and then I guarantee you we'll start doing this. It might not be quite as quickly as these, but this is the historical trend in this part of the country, in Metro Atlanta. We start low in January, come on up. We kind of hit a top in about July, and then we start working our way back down through the rest of the year. Same thing here. January, start low, shoot on up through July, start working our way down. This year was definitely the higher interest rates and things contributed to a quicker reduction in closings. But even still, like I said, we are, for the year, it was a great year. Prices were up, closings were down. December to December, prices were still up. And this is what I really want you to pay attention to, is just not as many homes are hitting the market because, like I said, sellers aren't quite as incentivized to, unless they have to move or want to move. But they have a low interest rate currently, most likely. So they're going to stay with that unless they need to move. And then buyers are, they're still going through these. The new listings that are exciting are selling right away. Like I said, multiple offers, high prices. But the stuff that's just sitting on the market is sitting there because buyers aren't as excited by it. They don't have as much incentive to bounce on those. They can wait and see what else hits the market. So buyers have a little more leverage. Sellers still have a lot of leverage. It's a good market. If you're thinking of selling, I would do it sooner than later. historically, the selling season comes on March, late or early to mid-March through the summer. But buyer demand is still pretty high right now. So I would try to get a jump on your competition. Get it while those new listings are still lower than historically. And if you have a house that's priced right, looks good, ready to sell, it'll sell. And then buyers, it's a good time to buy. Interest rates might be higher, but like I said, you're not having to blindly bid $50,000 over asking, waive any appraisal contingencies or inspection contingencies that you did have to do a lot of times recently to make a deal happen. So more importantly than ever, it's a local market, and in shifting markets like we're in, you want to make sure that you keep your news and information and stay on top of your local market. The news kind of reports things at a national level or a state level, and that's good sometimes, but to know how it actually is impacting you, get with us. We have our finger on the pulse of the metro Atlanta housing market, and we are happy to assist you, whether you're looking to buy, sell, do whatever you want to do, all things real estate. You know who to call, the Alan Turner Home Team. And if you don't know us, Google us, search for us, find us on YouTube, youtube.com/Alan Turner Home Team. Find us on Facebook, facebook.com/Alan Turner Home Team. We're all over the internet. Or you can do it old school and you can call us. You can reach me at 770-490-1427 or D. Allen at 678-206-6041. Call us, text us, email us, allen.turnerhometeam@gmail.com. There are so many ways to get in touch with us. Do it, and you'll be glad you did. So here's to a happy 2023, and let's hope the housing market continues being as strong as ever in Atlanta. All right, guys, talk to you soon. Thanks.